Let's bring in Stuart. He's Global Energy Strategist at Piper Sandler & Company to talk about, of course, oil and where it may be going in 2023. Jan, welcome to the program. Always great to touch base with you. I know our viewers always have strong interest in the commodity and the shares of oil and gas producers as well. We're ending the year on a down note, at least for the commodity. It's been under pressure recently. What do you see for let's say, the first half of 2023?
It's funny, right? Because the year is not yet over. Maybe we can still make a few gains here into the year end. But for the first half of next year, totally, we expect to see things tighten up. We've been expecting that for a while. Fair. There was a lull in things in November, early December. Then we think now, especially with the Chinese reopening, things should tighten up into the first half of next year.
You say, however, in your 30-page report on oil, the first sentence is, the only thing more certain about 2023 is that it will be filled with more uncertainty. So what type of uncertainty should oil investors and oil equity investors get ready for?
Totally fair point. And it's indeed the first of 30 pages on the entire spectrum of energy. And what you have learned in the last few years and what you will see more of in the next year is political uncertainty. And that's everything. That's the war, that's windfall profit taxes, that's regulation. Politics matter a great deal. It makes this oil commodity fantastic to forecast because it is, as per usual, impossible. But one of the bigger forces here is policy. What is the impact of the European oil embargo? What is the war going to do? What are we in Europe especially going to do with windfall profit taxes? There's no end to the uncertainty, and that's par for the course.
And there you see some of the themes that Jan Stuart believes will shape the market in 2023. Energy, reliability and security, not just a transition to lower carbon forms of energy. Tectonic geopolitical shifts, we'll get to some of that in just a moment. And more inflation, more entrenched, all of them shaping the market. Your price targets on oil are 110 for Brent and 104 US dollars per barrel for West Texas Intermediate crude. That would represent significant gains from where we are now.
Fair. And also this year, where we are now, after all is said and done, we're probably going to end the year in the mid-90s for Brent, right? Which is up significantly from last year and the year before. So there is a little bit of a trend here, or much of a trend here, in the upward direction. And we think that we are still in the early innings of all of this, yes.
In terms of tectonic global shifts, you and your colleagues write about the war in Ukraine, and you make the point, and I think almost everybody would agree, that it's very, very difficult, if not impossible, to predict when that comes to an end. But you do predict that it has made a fundamental shift in the world political order in terms of achieving consensus on things like addressing climate change and other things as well. How will that affect the global oil market?
You know what? It makes everything more uncertain, for one. But for two, it just means that you're going to have more reliance on the stuff that you can more easily control. Your trade routes are going to shift. I strongly suspect that in North America, the United States with its neighbors is going to remain independent or self-supplied in oil. We're not going to go back to a net importer status, if we can help it, of anything to do with energy. So I strongly doubt, for instance, that America is going to push a transition very hard, because that transition in the first instance would make it mad dependent on all things China in terms of battery materials, in terms of processing of rare earths. So the supply chains, what we mean with all of that, we mean that those supply chains need to become, in the first instance, more secure. And that is the world over. Every economy of note is going to try and make its energy transition. Sure, it will transition, but first of all, to things that are more certain. Certain as in my cell phone falling over. We want things to be more stable.
Okay, you can stabilize that telephone. We're told you're good. You look great. Good job of resetting the camera on the fly. How long, Jan, will the disruption to this transition? That had been a big theme prior to the war in Ukraine, prior to COVID. This theme of economies around the world transitioning fairly rapidly, perhaps in overly optimistic scenarios, away from carbon fuels into lower carbon fuel technology. How significant is the disruption to that transition and those optimistic timelines?
I think it is very, very specific to the region. For instance, in Europe, you're doubling down on that transition and it cannot go fast enough, and you will spend to make it go faster. And the Europeans need to do that in very large part also because their own energy security depends on it. They figured it out again this year, right? When Mr. Putin turned off the gas taps, that was a stark reminder of a lesson that they could have learned all the way back in the 1970s when it was the Arab oil embargoes that gave them a terrific shock on energy. European leaders are looking forward to making themselves independent of those exogenous shocks to their energy systems. And that comes through transition to more sustainable, more renewable, but most importantly, indigenous energy sources. Wind, solar, nuclear will go very fast in Europe, we think. Same in China, less fast here in America, where you can afford to go all of the above as circumstances allow. So first, you're going to reshore all the supply chains associated with renewable energy sources. You're not going to depend on solar panels, for instance, on China. Does that make sense?